Currencies were confined to tight ranges on Thursday, all trading within 0.5% of daily opening levels. This week has been quiet overall thus far, and there hasn't been much at all to grab at as far as any clear indication of next moves. We've seen the ECB decision and Fed minutes come and go with no surprises. Meanwhile, some of the other big picture stories aren't looking like they will be making any breakthroughs anytime soon. The EU has just offered up a 6-month extension on Brexit, while US-China trade negotiations aren't giving us anything other than fluff. And so it makes sense that price action has been reflecting these developments, though it's worth noting that if we look closely, there has been a mild US dollar selling campaign since late last week, seemingly triggered on the softer hourly earnings component in the US jobs report, which suggests the Fed has more flexibility, if not only retaining, but even potentially building on its latest shift back to the accommodative side of policy. Of course, this would translate into US dollar selling as those yield differentials move back out of the dollar's favor. As far as the remainder of the day goes, we get a batch of central bank speak from various officials at the Fed, Bank of Canada, and European Central Bank. Friday's calendar is rather uneventful, with some early China data standing out before things quiet down into North America, where only Michigan confidence readings are of consequence.